The Bank of Canada just lowered rates 25 basis points. Now, I noticed that the usual suspects of real estate agents and mortgage brokers on social media are getting less enthusiastic every cut. Why? Because the writing's on the wall. Even they figured it out. Rates may have gone down 25 basis points, but since 2021, grocery prices are up over 30%. Ditto for your gas bill, ditto for most services. And now property taxes are skyrocketing as governments are telling local cities and towns that if they want to fund themselves, they can't do it via development fees anymore, which means higher property taxes. Now, we all see the problems. If you don't, you're not paying attention. Our economy has been propped up by a housing bubble, cheap credit from big banks, government deficit spending, and immigrants coming in, buying into the dream of homeownership at inflated prices. The Canadian dream is no longer about starting a business or inventing something groundbreaking. It's about getting approved for a mortgage so large it makes you question if you're going to be able to retire by the age of 80. Our addiction to real estate has turned us into a nation of speculators instead of builders. Instead of creating value, we're flipping houses and praying the next sucker will pay even more than we did. Meanwhile, the Bank of Canada keeps lowering interest rates because apparently the solution is always more debt. And let's talk about those big banks while we're at it. If you break them down by enterprise value, which is what analysts use, that is market cap plus debt less cash, the big banks are our top companies in value across Canada. These institutions aren't just financial intermediaries anymore. They're untouchable oligarchs. They've got their tentacles wrapped around everything: mortgages, credit cards, investment portfolios, and retirement savings. And guess what happens when people default on loans or miss payments? The banks don't suffer. They pass the buck straight to taxpayers through bailouts disguised as economic stimulus. Remember 2008? Remember COVID? Yep, rinse and repeat. They print money like confetti at a parade. Free money for everyone. Well, not really. You'll pay for it later through inflation and higher taxes. Now enter Donald Trump with his promise to slap 25% tariffs on Canadian goods. Economists are losing their minds, screaming about how this will hurt trade relations and cause all sorts of chaos. But let me tell you something. Sometimes pain is exactly what you need to wake up. Canada's economy has been coasting on complacency for years. We export raw materials and import finished goods. We rely heavily on the US market without diversifying our trade partners. So yeah, maybe those tariffs will sting. But maybe, just maybe, they'll also force us to innovate, to find new markets, and to stop being so dependent on one customer who clearly doesn't mind kicking us in the teeth whenever it suits them politically. If Trump follows through on his tariff threats on Saturday, and recent history suggests he probably will, it's going to create some serious global uncertainty. When there's uncertainty, investors flock to safe havens. And what's the ultimate safe haven? Gold. That shiny metal that most people don't care about has been around longer than any fiat currency and will outlast them all. Gold right now is the third largest reserve currency after the US dollar and the euro. Central banks worldwide are hoarding gold like squirrels preparing for winter because they know paper money only holds value as long as people believe in it. And right now, faith in fiat currencies is shaky at best. Think about it. Tariffs disrupt supply chains, drive up costs, and lead to retaliatory measures. All of that spells inflation. Higher import prices mean consumers pay more for everyday goods, which eats away at purchasing power. Meanwhile, governments respond by printing even more money to keep the wheels turning, further devaluing their currencies. What do you think happens next? People start dumping bonds and stocks and rushing towards hard assets that hold intrinsic value, like gold. It's simple supply and demand. When confidence in traditional systems waver, gold shines brighter than ever. Canada, unfortunately, isn't immune to this dynamic. In fact, we're uniquely vulnerable because of our reliance on exports and external financing. If the loonie tanks under the weight of Trump's tariffs, imports will become astronomically expensive overnight. Suddenly, that avocado toast you were willing to sell a kidney for will feel like actual luxury dining. And what happens when Canadians realize that their dollars buy less and less each month? They look for alternatives. Enter gold. Let's zoom out for a second and consider the bigger picture. The world is heading towards a perfect storm of geopolitical tensions, technological disruption, and unsustainable debt levels. AI is reshaping industries faster than anyone can adapt, leading to massive job displacement and social unrest. Meanwhile, central banks are trapped in a cycle of quantitative easing and rate cuts, unable to raise rates without collapsing fragile economies. This is the environment where gold thrives. It's not just a shiny rock. It's insurance against systemic failure. So back to Canada. What's our plan? Print more money? Obviously. Because nothing says economic stability like cranking up the presses and flooding the market with cash. Sure, it worked during COVID until it didn't. Now we're stuck with sky-high housing prices, stagnant wages, and an entire generation priced out of the market. Add tariffs to the mix, and suddenly we're staring down the barrel of stagflation. Low growth combined with rising prices. Sounds fun, right? The silver lining, for people like us who like to pick stocks, it's that this disruption is about to blow gold prices through the roof, and it's going to create an incredible shopping list of value in the coming months. For once, Canada might actually benefit from its own dysfunction. We've got plenty of mining expertise and natural resources, including gold deposits. Maybe this is the kick in the pants we need to pivot away from speculative bubbles and towards tangible wealth creation. After all, you can't eat a house payment, but you can trade gold for food. Canada's economic model is broken. We mortgaged our future to big banks, politicians, and foreign buyers chasing the housing dream. Trump's tariffs might hurt in the short run, but they could also force us to confront reality and rebuild smarter. And when the dust settles, gold will emerge as the ultimate winner. Not just for investors, but for anyone looking to protect themselves from the inevitable fallout of reckless monetary policy and geopolitical brinkmanship. All right, everybody, that's all I got for you guys today. If you enjoyed my rant, please let me know what you think in the comments section. Also, don't be afraid to hit that like button, subscribe, and ring that notification bell. Thanks for watching, everybody.